Hello, you are welcome. We want to look at this case study with fib levels. Case study with fib levels, and the pair we'll be considering is the Euro USD. Like I said, we have to be doing top-down analysis. In this scenario, we'll be looking at from the weekly to the daily. Okay, and what are we looking for? This is just exactly what we're looking for. We want to see something like this on the weekly. This is the higher time frame, so we are using our weekly as higher time frame. Right now, let's take it that we have seen this particular structure, market making up movement, down movement, form a low, a high, and then price take out this high point. This is a confirmed structure that yes, this is a buying market. And then the next thing we want to expect is for price to come down, tap into our Fibonacci level. Okay, any of the levels, we have 0.6 level and we have the 0.7 level. In this scenario now, what we'll do as an example is to take our Fibonacci retracement tool, draw it from the low to this new high. You know, this is the new high point that has been formed. Now we observe what will happen on the 0.6 level. Okay, this time around we are going to go to the lower time frame. Okay, if the weekly is the higher time frame, the corresponding lower time frame will be what? Will be the daily time frame. Now we'll go to the daily time frame on the 0.6 and see if we'll see our entry signal there. This is a very simple way to trade, and it's very powerful and effective. Now we'll now go to the daily time frame to look for our entry model on the 0.6. If we see it, we take the trade. If we don't see it, the next thing we'll do is to also anticipate what price will do. If when price get to the 0.7, we see our entry signal there. Just the same thing, take our Fibonacci level from the established established low point to the new high point. We draw a Fibonacci retracement level, and then we anticipate price to get into the 0.7. When price get to the 0.7 on the higher time frame, then we switch to the corresponding lower time frame. From the weekly now, we then switch to the daily to look for our entry signal. I hope you understand it. So that is how we look for our trade. That is the skeletal explanation. Now we have seen the structure. This is the structure that has formed. Okay, we have the previous high point there. Then we have a new low. Okay, this new low is established because price has now taken out this previous high point. Let me mark it with that red line, and then this is the previous low that is now established. Okay, now this is this is now the new high. Okay, the new high point that has just been established. So now in my own mentorship class, like I mentioned before, I can explain to you how we get to know that this new high point, this is the new high point. Okay, what are the things we have to consider for us to confirm that this is a new high point? We already know that this is a established low and established high, because price came down from this high point, went up, took out this high, the previous high that has been created. By so doing, this low is now established. Now the question now is, how is this new high point established when the candlestick has not taken out this new low? Okay, and this other low, because the time we got this new low to be established was when it has taken out the previous high point. So therefore, if we want this high to be established also, is when it has taken out this low point. But in this regard, we are looking for our buying opportunity in this market, and we already said that this is an established high point. So this is just one of the key things you can learn from my mentorship program. So aside that, let's go ahead. Now, since we have that high point, the next thing we'll go to do is to draw our Fibonacci retracement, take it from the established low. Okay, then we'll take it to the new high point. When we do that, let's mark out our 0.6 Fibonacci level. Okay, let me mark that out. Weekly 0.6 Fibonacci level, and mark that. Then we'll mark out our 0.7 Fibonacci level. That's on the weekly. All right. Now, when I've done that, what we have to do is to take out the Fibonacci retracement tool so that our chart will be very clean. And this is just this simple strategy you can apply on any trade you see. Okay, you can apply it on forex, synthesis, and any other trade, but it's mainly for swing trading. Very effective for swing trading when you are looking for monthly, weekly, daily, and then 4 hour and probably 1 hour time frame. Okay, now in this point we have in this point now we now have price tap into the 0.6 weekly Fibonacci level. Like I explained in all of this, when we get to 0.6, okay, what we have to do is to go to the lower time frame. Now we are on the weekly time frame. We will now have to switch to the to the daily time frame to look for our entry model. Okay, now you can see we're on the daily time frame. From the weekly now we are now on the daily at our lower time frame. We'll be looking at here if we are going to see our entry model. This is a replay, so let me play it and let's see what happens. Okay, you can see in this area we did not see our entry signal there. We did not see our candlestick formation, the morning star candlestick formation, all those signals that we have. We have 3 major signal that we can use to enter this trade on the lower time frame, but in this scenario we did not see that happen. So therefore, what do we do is for us to exercise the patience and then wait for price to come into the 0.7 level. Okay, so let us go back to the weekly. Okay, we'll go back to the weekly time frame, which is our higher time frame now. Since we did not see our entry on the 0.6 Fibonacci level on the weekly, then we'll wait for what price is going to give us on the 0.7 level. So what we are waiting for is on this level. Okay, let me play. Okay, this is a practical lesson you can apply for the chart. Now when we see this, what happened is this: price has now gotten to our 0.7 weekly Fibonacci level like we just did. What do we do now is to go to the corresponding lower time frame, which is the daily. Now when we get to the daily time frame, we are going to watch out for what price is going to do. Okay, you see, with what price just did here, this is our entry signal. You can see it over here. This is our morning star candlestick pattern formation. Then what can we do here? There are 2 ways we can enter this trade. Either we enter directly on the full signal, okay, and then our target is going to be this new high point that has been formed. That's the new high point, and in this trade we'll have 4.2, about 4 risk to reward ratio. Okay, that's the first way we can enter this trade. Then the other way we can enter is to wait for price to come into this demand zone. Okay, this is the demand zone. This full candlestick formation, one, this first one, second one, and then the third one. This is our signal we are looking for. All right, I explained it very well on how to get this signal. Now it's very easy to know the first candlestick with a larger body, the middle one with a smaller body. Okay, then the third one with a very big body that we shoot out from this our weekly Fibonacci level. When that has happened, that's the first way we can get the signal. Okay, the second one, like I said, is when price now come back into, we can wait for price on the daily time frame to come back into this demand zone. So when price come into the demand zone, we set our buying tool there. Okay, we can put it here, and then our target usually will also be on the new high point that has been formed, because from the daily we have from the weekly we have our direction that this is a buying market, right? And we now have our signal on the weekly Fibonacci level that we are observing now on the daily. I hope I'm not confusing you. When this happens, then we can wait for what price we can now check out what price will do. This is going to give us a 12.26 risk to reward if we enter this trade. Okay, it's just to spot it and then we enter accordingly. Now what do? Let's see what price will give us on this trade. Okay, we can now see what plays out on this trade. It was a beautiful 12.26 risk to reward. Now we may want to know how long would this trade have played out from this price range that price came into this demand zone and then went all over to the new price level to the new price level we now have on the weekly. Okay, how long did it take for price to move from this 0.7 Fibonacci level of the weekly to the new high point that we now have on the weekly time frame? Let's go to the weekly now. We want to know how long it would have taken for this trade to play out. You can see this is the new high point, previous low point. Now we got our entry on the weekly Fibonacci level of 0.7. Then how long would this have taken? Let's calculate it. From 17 November to 26 January. That's about 2 months thereabout. Now this is how we can trade effectively, just using this simple strategy for price to get to our 0.6 or 0.7 level, maybe on the weekly, on the daily, on the 4 hour, on the 1 hour, and so on and so forth. I hope you understand this video, you enjoy it. Please leave a like and subscribe. Thank you.